It's just a paperwork. Why it's not a part of double entry system? Because we are not passing transaction entries in which we are making sure that a double entry system is in place and is ensured. It can be prepared any time during the accounting period in order to check the arithmetical accuracy of the accounts. It is always prepared on a particular date and not for a particular period. So when we talk about financial accounting, we deal with a number of things. Like, for example, you'll be dealing with income statement as well as balance sheet. So the income statement is one first uh, financial information or a statement of financial statement. The second one is your balance sheet. Okay. So we must understand income statement is prepared for the period, whereas balance sheet prepared as on a date, as on a time point. So in a way, income statement is following the flow concept and the balance sheet is following the stock concept. It is prepared to check the arithmetical accuracy of ledger accounts. Objectives, we understand a certain arithmetical accuracy, completion of double entry, providing a summarized ledger, and to rectify any sort of error it would have made. If there would have been an error, the trial balance would match, and that would indicate as an error, and we can correct that error to help in preparation of final accounts. Now, there is a format of trial balance. The format of trial balance indicates that we need to name the account, name of the account, and then you give a debit balance, and then you give a credit balance. That is the format of a trial balance. Now, trial balance can be prepared through two methods. One is the balance method, another one is the total method. When we talk about the balance method, we are talking about that we'll be taking balance of each account is extracted and written against each account, right? So debit and balance in the debit column and credit balance in the credit column. In this method, the total of both sides, both of every account in the ledger is that is the balance method. Whereas in total method, what happens? The total of both sides of every account in the ledger is written against the name of the respective account without balancing them. So in order to understand that in a better way, let's have a look at an example so that we can understand. So we have a cash, for example, we are following the balance method first. So we have a cash ledger, you have a cash ledger. What do we have in a cash ledger? This is how we generally prepare a cash ledger. There are dates, there are particulars, there are amounts, right? So what do we get in the end? We get the total of both the sides, debit as well as the credit. Okay, and there you have a balance. How did we find the balance? We totaled this, and the side that was short of was given with the balance, and that this balance is brought down here. And this is the balance that we will take to the, where will we take it? We will take to the trial balance, right? So this is how we, in the trial balance, will write cash account 63,000. So have a look. Is this clear? Now, when it comes to total method, what happens in case of total method? We don't find the balance from the ledger account. Which account is balanced at which point? We don't take that. All we take is the total of debit side and the total of the credit side. So what happens in this case? You have the same ledger account, but here you would be totaling all of these, and then you will be totaling all of this. You will get the total 70 plus 90 plus 2090 plus 1. So here we'll get a balance of 1 lakh. And here we will get a balance of. So these are the amounts that we will take to the trial balance in front of the account. So that's how we prepare a trial balance, right? But which method do we follow generally? We follow the balance method. We don't follow the totals method, is not common, and we would be following the balance method. Balances to be placed in debit and credit side Our credit balance of the credit balances are all the assets which have a natural balance of debit side, we'll place them on the debit side. To name a few, we have asset accounts, we have expenses account, we have losses, drawings, cash and bank balances. And on credit side, we have liabilities, in account, income account, profits, and capital account. So one checklist is there. It doesn't matter. You don't need to learn any sort of checklist here. All you need to have is to develop an understanding which balance would have a debit balance and which balance would have a credit balance. The balance, how do we decide? We decide through the natural balance of the account. That's how we decide whether the account will have a debit balance or a credit balance. So there is one example with us. So we can, if we can quickly run through it, we'll be in a position to understand that. Here, I would like to have your participation. Now, tell me who is with me in this discussion. Yes, anyone who is here? Because after this example, I'll take you to the Excel sheet, and there we would be discussing the examples, right? So what is their opening stock? What is the natural balance of opening stock? Tell me. I'm not asking whether you'll debit it or credit. Tell me the natural balance of opening stock. How do you determine that? So you, first of all, whenever you see an item, you see whether it's an asset, it's a liability, it's an expense, or it's a revenue. And then the last is capital. Okay, so natural balance of a debit of an asset is, what is the natural balance of an asset? Debit. What is the natural balance of a liability? Credit. Expense, debit. Revenue, credit. And capital, you have credit balance. So if you understand this thing, then you will understand this as well. If the asset increases, the natural balance of asset increases. So increase in asset leads to debit. What is the natural balance? Debit. Na? So if asset increases, it will lead to a debit entry. And if asset decreases, it will lead to credit. So increase in liability will increase the natural balance, it will lead to credit. And a decrease in liability is a debit. Expense has a natural balance of debit. So an increase in expense, we will debit it. And a decrease in expense, we will credit it. Revenue. Revenue has a natural balance of credit. An increase in revenue will credit it. An decrease in revenue, you will debit it. Similarly, capital. What happens in case of capital? An increase in capital, you will credit it. And in decrease in capital, you will debit it. So we understand this thing. Now we are good to go with our next discussion. Opening stock. What is the natural balance of opening stock? Opening stock is an asset. It will have a debit balance. Purchases refers to stock, inventory, asset. It will have a debit balance. Purchase return. Purchase return is inverse of purchase, right? It will have a credit balance. Sales. What is sales? Revenue. Because purchase return has decreases purchases. So that's the reason why I've credited it. Okay, it led to a decrease in asset. Okay, revenue is sales. Revenue has a natural balance of credit. Sales return, inverse of revenue or decrease in the value of sales, we will debit it. Rent, what is rent? Rent is an expense. We will debit it. Salaries, again an expense. We will debit this. Advertisements, expense. What will we do? We will debit it. So online commission received. Received is income. You will credit this. Discount, already given. Discount is an expense, but they have given it here as a credit. So that means we would have received. So we'll write a credit account here. Furniture, what is furniture? Asset. Balance will be debit. What is machinery? Asset. Debit will be, balance will be debit. Debtors, asset. Debit. Creditors, liabilities. Credit. Bills receivable, asset. Debit. Bills payable, liabilities. Credit. Cash in hand, asset. Debit. Bank overdraft, a liability. Credit. Interest on overdraft, you'll have to pay because you got it, right? So it's again a liability. You don't receive an interest, you pay an interest. Credit. Capital is a, obviously I told you, capital is a liability of the business and is treated as a separate head. So it will have a credit balance. If you understand this simple thing, then preparing a trial balance on the basis of balance account, and if balances are not given, is an easy thing. Now let's have a look at this. Are we correct on this? Yes, I think we have done the fair job, and that's the solution to this trial balance. Are we together on this? Is it okay? Okay, now that's all. Now I'll take you to the practice questions, right? And if we did this fine, then we'll move further. Now, how many of you are with me on this, and so that we can solve this question? Yes, anyone who is with me on this? Yeah. Okay, you need to unmute yourself. I can't see all the screen. So please, whenever you have a question, unmute yourself and feel free to ask me. You can interrupt me whenever you have a doubt. Yes, go ahead. So let's start. Right? So we'll prepare a trial balance here. I'll not stick to the format. My aim is to discuss to make you feel that you can prepare a trial balance, okay? Now, let's discuss this. Okay. Okay. Tell me, where would I place opening stock? What would I do with opening stock? What is opening
Debit.
stock? Why? Debit.
Asset. Yes.
Right? Asset. Okay. Next is wages.
Credit.
Wages. Credit over.
Debit,
Why?
as it is an expense.
Yes. Now, after that, we have sales. What is sales? Revenue. What do we do with this? Sales is a revenue. What
Credit.
is it? Credit, right? 1,20,000. Then you have bank loan. What do we do with bank loan?
Credit.
Why?
It's a liability.
Very good. It's a liability. You'll credit it. And then you have this coal and coke.
Cool. Asset.
Coal and coke is an asset. It
Asset.
indicates expenditure on coal and coke is not asset. It indicates expenditure on power or fuel. That's the reason why I've taken it. Purchases indicate what?
Asset.
Asset, right? 75,000. After that, we have repairs. Repairs is what? Expense.
Expense.
It is 2,000. Then you have carriage. Carriage is expense. It is 1,500. After that, you have income tax. Income tax is what?
Expense.
Expense. So you get 20,000, and then you have leasehold and
Ma'am, debtors.
the yes.
Debtors. After
Okay.
income tax.
Yeah, I'll add that. Thank you. So income tax is 1,500, है ना?
Yes.
Leasehold premises are 6,000. And now let's see at debtors,
20.
20,000. What are debtors? Asset. Okay, cash in hand,
Asset.
asset, 200.
Debit
Okay,
side.
so let's do it. We'll place it later on. Plant and machinery,
Asset.
Asset and
assets, 7,500. Debit balance, right?
Yes.
Then you have loose tools,
Inventory. Oh, sorry.
lighting, 2,300. Creditors, this creditors, 8,000. Is it okay?
Credit side.
Creditors have credit balance. Capital, capital has a natural balance of credit, liability आ गया. Then you have miscellaneous
Receipt.
receipts. Okay, now what is this? Tell me. Yes, miscellaneous receipts. What do you call this? Miscellaneous receipts, asset or liability?
asset.
Asset है, income है. Income becomes revenue. Receipts है ना, you're receiving some sort of income. It's a revenue, it will have a natural balance. Office salaries,
Expense.
expense है, right? 2,500. Office furniture,
Asset.
asset, 600. Patents,
Asset.
Asset.
asset. Goodwill,
Asset.
Asset.
goodwill is an asset, right? What type of asset is goodwill?
Intangible.
Intangible.
Intangible asset.
Asset.
Closing
Closing.
stock,
Asset as well.
right? Now let me take all of these values. I hope I'm. What is this? Loose tools. You have right. Okay, now we have every transaction recorded with us. Let's check how good we have done. So I'll be totaling. Can anyone tell me why is it not giving me right answer? So can anyone tell me why is it not giving me the right answer? Did we miss something? Let's have a look again. Opening stock 18,000, right? Wages 10, sales 10, 4,300, 4,400, 3,000, 75,000 of purchases, repairs of 2,000, then you have 1,500 of carriage, then you have income tax of 1,500, then debtors of 20,000, 6,000 of leasehold premises, cash in hand is 2,200. Plant and machinery 7,500, loose tools 1,800, lighting 2,300, right? 8,000 of creditors, right? Capital 40,000, miscellaneous receipts 6,600, office salaries 2,500, office furniture 600, 1,000 is cash at bank. This should be correct. Why is not correct? Is the question incomplete? What's the difference that is coming up? 5,000. That means somewhere we have made either a mistake of 2,500. Okay. Now tell me what is the mistake? This is the mistake. Did you get what I did? Anyone guessed what happened just? See, you have been given opening stock. Along with that, you have been given closing stock. So opening stock already included the closing stock. You cannot count one thing twice. There was an opening stock of 18,000 that you have already included. And when you write closing stock, you're re-recording the stock, right? So that indicates that we need to record only opening stock, and if both are given, then we will drop the closing stock. Is there any sort of rule for this? No, we just use our understanding to identify this thing. That the rule is that you cannot count the same thing twice while preparing the trial balance. Am I clear on this? Are we together on this? Yes?
Yes, ma'am.
Who are here? Okay. Now let's solve this one now. So how would you do that? Let's do this. Capital. What balance will have capital? Credit balance, right? Then you have stock, opening stock.
Yes.
You will write 5,000. Stock at the end is also given. Stock in the opening is 5,000. Stock in the end is 33,800. Okay. Discount allowed. Discount allowed is expense. It will have a debit balance. Commission received.
Credit.
Fixed assets.
Debit.
Sales. Purchases. Return outward. Returned outward means return outward refers to what? Purchases return. So it will have an inverse entry of purchases 1000. Then you have return inward. It is, what is return inward? 2000. So it is sales return. Okay. Carriage inward. What is carriage inward? Carriage inward is whether it's carriage inward or it's carriage outward. It's an expense of the business. We will always have it as a debit balance. Okay. Because you have paid it, right? Am I missing some sort of account or is it all, missing? Now, wages and salaries.
Expense. So, cost.
And salary is 25,000. Bills receivable. What is bills receivable? 7,000, right? Then you have debtors. That is 9,000. Then you have bills payable. Bills payable is, what is bills payable? Liability. It will have a credit balance. What is the credit balance for bills payable? Then you have rent. What is rent? Expense. Interest paid. Interest paid is an income or an expense? It's an expense. You have a debit balance. You have cash. It's an asset. You will have a debit balance. Creditors. You have 69. Creditors have debit balance or credit?
Credit.
They have credit balance, right? Now stock at the end. Let's see here. What is your opinion on this? Stock in the end is greater than this. What does this mean? Will we have a total equal to? We can see that, but you need to tell me. Let's have a look what happens. Let's check. Okay, now tell me. What has just happened? Why stock at the end is, should we include this or should we not include this? What does this indicate to us?
That there is an increase in stocks at the end of the year.
Sorry?
There is increase in the stocks.
Yes, very right. There is an increase in the stock. So, see, you're right here when you say there is an increase in the stock. We need to understand something. We have an opening stock that is 5,000. Then we made some sort of purchases that is 45. On the way, what happened actually? In reality, what the funda is, how things are working. You have opening stock. You make some sort of purchases. Okay, in order to get some goods. So this is the stock that you consume. Out of this good, then you have closing stock. Right. So that means there was already an opening stock. Let's assume 100 units were already there. And then you purchased 7,000 units also. How many units do you have in total? Suppose you have 1,000 in the beginning. You purchased 7,000 more. So you had total 8,000 units to be consumed. if it's a production, or to be sold if it's a trading unit, right? Out of this, you were in a position to sell only 3,000 units. So what is the level of closing stock here? You had 1,000, you bought 7,000, you had total 8,000, and you sold 3,000. How many units of closing stock do you have? You have 5,000 units of closing stock, right? And this is simple understanding, and nothing based on accounting here. But the point I want to make here is, when I was doing my accounting, I counted this in my trial balance as opening stock, right? Then I counted purchases as well in my opening stock. So whatever is the closing stock, I have already counted it once as a total of opening stock plus purchases stock. Do I need to count this again in the trial balance? If I count again 5,000, then I will be indicating that in total I was having 8,000 plus 5,000, that is 13,000 of units. Whereas in reality, how many units I actually was having during the year? I was having 8,000 units, out of which 3,000 have been sold. So that's the reason why I'm having a closing stock of 5,000, right? This is the reason why we don't include closing stock as part of trial balance, because the accounting effect of it has already been reflected in the opening stock as well as in the purchases. And that's the reason why we don't include the closing stock in as part of your trial balance. So that means if I just click here and delete it, I'll get the balance of my trial balance. Is it okay?
Yes, ma'am.
Right? Okay. Now I come back to you. You give me anyone having any question, you can ask me. If no, then we will move further and we'll try another question. Now you need to tell me, do you have a question? Or I take you to another question. I have a set of questions to be discussed as well. I can take you to those as well. You need to give me a choice. What do you want to do? Whether you want to try another question, which is based on rectification of errors. We can correct some errors of trial balance, one option, or we can discuss another set of questions.
Ma'am, can you provide one example with the error of trial balance?
Sorry?
Like one example with the error, like if there any mistake in the transaction,
Yes.
then what will happen? How
Okay,
we will
give me a
record
minute.
trial balance?
I'll share the screen now and then. Okay. I have to share the whole screen. So we can discuss one example, which is like this. So we have discussed this one where we were preparing simple balance and trial account, trial balance. Excuse me. Now we can discuss this, right? Let's discuss this. This is the question. In order to answer this question, as we can see, we'll have to prepare first the trial balance, and then we will have to correct the entries information which is given in order to prepare an adjusted trial balance. We are not going to prepare the ledger accounts here. So the first account we have is salaries. Okay, now tell me what is the balance of salaries? 75,000. Then you have rent. Rent is also an expense. You get 15,000. Your purchases, Purchases, what is the balance of purchases?
1,75,000.
Then you have debtors. Debtors will also have a debit balance. Then you have opening stock. What is the debit balance of opening stock? Then fixed assets. Okay, they have correctly placed all of these. Then you have return inwards. Return inwards is what? What is return inwards? Sales return, debit balance, bills receivable, 37,500. Wages, you have 5,000. Insurance, you have 7,500. Then you have sales, 2,75,000. Capital, 2,50,000. Creditors, 50,000. Bank overdraft. What is bank overdraft?
Liability.
Liability. Bills payable, 25,000. And then you have returns outwards. Return outwards is purchases return. Okay.
Ma'am,
Now,
there is, ma'am,
yes,
opening stock balance is 30,000 rupees.
okay.
Opening stock 30,000.
Let's open it. Thank you. Now we have it here. Now credit purchases of 10,000 and credit sales of 20,000 have not been recorded in the books. What would we do? Credit purchases of 10,000 have not, an entry has not been recorded at all. What would be your answer to that? You would add in the purchases because it was not recorded. Now it was not recorded. That is the reason. So we will record it now. So we'll add to whatever is existing plus 10,000. So it was 1,70,000. It will become 1,85,000. Okay. Now credit sales of 20,000 has also not been recorded. So let's record sales as well. So you record sales 2,95,000. The outstanding liabilities, wages of 5,000. So wages of 5,000. We need to record these as well. Wages 5,000. Do we have wages? 5,000. What is outstanding liability?
And sundry creditor and debtor balance also increase.
Right, good. Okay. Wages, we'll come to that. Wages, outstanding wages. What would you do with outstanding wages? And then outstanding rent. Carriage inwards. Prepaid liability insurance. How should I take prepaid insurance?
Debit balance.
Paid. Now, what about, yes, Credit purchases of 10,000 we have increased, very rightly said. But what about the other aspect of that? Credit purchase. If it's saying, it was saying credit purchases. So what is the meaning of credit purchases? Yes, please. Someone was saying something.
Credit purchase means we have no payment of this amount, so
Yes.
credit will also increase.
So that means we have not paid. What if it would have been a cash purchase?
Then bank or cash will decrease and purchase.
Very right. So what should I do? Creditors are there. Credit purchase means I purchased 10,000, but I haven't paid for. So I added into purchases, but then I also need to add on to the creditors. Creditors were 50,000. I'll make it 60,000. Now the flip side of credit sales. What will happen with the credit sales? Credit sales was increased by 20,000. So that means, but I haven't received the amount. What will lead to? It will lead to increase in the debtors as well. So I'll increase in the debtors as well. Now, the next thing is outstanding liabilities. Wages. Wages are increased by 5,000. Rent are increased by 2,000. And carriage inwards are increased by 1,000. What is the other effect of this?
Expenditure also increased.
Which
And,
expenditure?
like wages increased by 5,000, rent increased by 2,000,
And
carriage inward increased by 1,000, and insurance decreased by 500,000.
right. So why are we doing this? Let's do this first and then let's understand the logic behind it. So where are our wages? Do we have wages? Yes. We'll increase the wages by 10,000. You'll increase the rent by 2,000. And then you will increase the carriage inwards. Carriage inwards. Was there a carriage inwards before? I'll add it to the return inwards by one. By one. Right. And then you have prepaid insurance of 5,500. So you'll decrease the insurance by 500. This will give us a balance. Fine. Is this okay? This is, I hope this is okay. But the point here is, whenever we are making up an adjustment, now who would like to discuss this or tell me about this a little further on this? So this is an additional information. What is the implication of this information? What is the implication of this information? The first thing is, my question is, has the